Good afternoon. Thank you for joining us today for the New York Northeast Power Summer Outlook. As we're going through the webinar today, you can type in your questions on the box on the right side of your screen, and we'll address them at the end of the webinar. And now I'll turn it over to your presenter, Nick Zija.
Hi, good afternoon, everybody. Thanks for taking the time to take a look at New York, New England. So we prepared basically what's a primer for the summer outlook here. What I'm going to take you through are just some of the bigger drivers that we see for the summer here in New England and New York. We started with a historical look back at the LMPs. For New York, we concentrated on A, G, J, and K. Ultimately, the only thing we want you to kind of take from this, the best analogs for this coming year are 2010 and 2011. So if you're looking for pricing points, this is a good place to start. We don't necessarily think that that last year is going to be apropos. We think last year is probably going to be a little bit higher than where we see the summer of 2013 coming in. But as far as the historicals behind this, like I said, a mix of those 2010 and 2011 years is about where we see this coming in. Very similar for NEPOOL. NEPOOL, we're looking at specifically the mass hub price. This is for June, July, and August. Again, analogs best to 2010 and 2011. We'll go through a few different factors that are going to change some of the prices, or our expectation of prices for the next few months. But we'll get into that a little bit further into the report. We also took a look back at the heat rates. The heat rates tend to be our best way of kind of communicating the overall costs associated with the month. So with the exception of you see that spike in the K price of July of last year, the heat rate should be relatively in line with expectation. Again, falling back to 2010 and 2011 as the best analog. For NEPOOL, nothing all that new there either. As I mentioned, 2010 does have a couple of gen changes that will make it a bit less of a one-for-one. But somewhere in between that 2010 and 2011 are again what we'd be shooting for as far as the heat rates over the summer. So the first piece that we took a look at was our assumption of weather as it corresponds to demand for the Northeast. As you can see here, we have our own proprietary forecast of summer temp levels. You can see our above normal does extend throughout the Northeast. This is slightly different from the initial forecast that we were seeing, but given the way that the temperatures have come in the last few weeks, there has been some more agreement around the fact that the Northeast is likely to see some above normal temperatures as well. Next question. The next slide is a representation of our precipitation expectations. You can see here we're below normal for the Northeast here as well. It's important to note we're not forecasting any kind of a drought condition for the Northeast, just below normal. So in other words, we're looking for a relatively short spring runoff season. This is probably more of an issue in NEPOOL than it is in New York. But certainly something worth noting as far as that kind of that run-of-river hydro cushion is going to dry up quicker than what we've seen in previous years. Looking at actually the last few weeks of data, we're actually looking. It's actually looking like that run-of-river hydro is actually drying up even more quickly than what we had initially expected. So. Our expectation here does seem to be coming in line with what we're seeing right now. As far as the weather discussion itself, same thing that I just mentioned in talking through those through those two slides there. So I won't spend a lot of time on this, but if you do have any questions, please don't hesitate to touch base with us. All in all, again, we're looking for temperatures normal to above normal, and precipitation is going to be normal to below normal. All in all, the precipitation being lower does help to push up that overall expectation of higher pricing and higher demand. As far as our forecast methodology, nothing all that different from what the rest of the forecast houses would go through. We are looking for some long-term analogs to take a look at. We don't see anything in particular that that is supporting the concept of a below normal summer. Generally speaking, the factors that we were risking on, or that we were looking at as potential risks to provide some downside, have since played out. That we actually think that the current weather conditions and the current model runs further support our expectation of that above normal temps. So onto the demand section here. This is kind of the resultant of our look at the weather. You can see for 2013 for New York, we're looking at 21.4 for June, 22.9 for July, and then 25 basically 25.1 for the on-peak averages. So this again, this puts us similar to that analog in between 2010 and 2011, as I had mentioned. We do not expect that that we're going to hit the record peak that we saw last year. For neat pool for the summer of 2013, again, same very similar analog to what we're looking for New York. 15.9 for June, 18.8 for July, and then 17.4 for August. Fuel inputs is going to be one of the more important aspects that we're looking at for this year. In general, the Henry Hub price is up year over year. So as a result of that, we're looking for prices to be escalated just from the base. Along with that, we also think that there is additional basis risk for neat pool. This is as a result of some work at the Cromwell pumping station. This is going to be specific to the AGT. However, with the basis likely to be escalated for on the AGT line, we do expect that the TGP as well as the maritime pipeline will follow suit, and we'll be looking at a strong premium for gas, especially in June during that Cromwell outage. One of the major impacts, or one of the major factors that we are looking at for New York this year is the introduction of the Hudson Transmission Project, or the HTP. This is an 8-mile submarine cable, runs out of Bergen on the PJM side into West 49th, into the West 49th Street substation Zone J. Just today, actually, we have confirmation that this will start flowing commercially on the 3rd of June. So this is going to introduce 660 megawatts, or the potential to introduce 660 megawatts of power into Zone J. At this point, they've been testing it in the real time. We have no reason to assume that they would not be able to hit that June 3rd date. So far, this seems to be proceeding as planned. As far as the risk associated with this, or the expected impact, We do expect this to be a bit of a downside for the Zone J price, as well as a bearish impact on the JG spread. This could create an upside risk for the northern New Jersey area of PJM. Looking at the makeup of the supply stack in that area, in talking and working with our PJM group, they believe that there is sufficient gas supply to be able to flow power over the line. I think the big question for this summer in New York is going to be the capacity factor associated with that power flow. It's unclear to us at this point the exact impact this is going to have on the congestion picture for Zone J, simply because of the fact that there are so many specific load pockets to concern ourselves with. Ultimately, we do think this is going to devalue those flows from VFT, but ultimately we do expect to see this provide a downside to Zone J as a result. In New England, there are basically three major transmission risks that we're concerned with. The first of which should be starting relatively soon. This is going to be from the end of May until June 14th. There's Berkshire to Alps work, which historically has derated the northern AC interface. This normally would not be all that great of a concern given the historical flows between New York and New England. However, with the potential for the gas basis risk on the NEPL side, we do think that this may be enough to drive power flows into New England, and if those are limited down from the interface's normal limits, then that could potentially one, cause a little bit of downside in Zone G, but also be a bullish risk for NEPL. Because one of the other, and I'll skip down one here to Albion Road Maxis. One of the other potential reliefs of that upside in NEPL would be additional flow in from New Brunswick. New Brunswick last November put Point Lepew back into commercial operation, and from what we've read from various press releases, they fully intend to push that power from Point Lepew into the NEPL market. The Albion Road Maxis work. Our concern there is that Albion Road is part of the Orange and South interface, as part of the definition of that interface. So as a result of work potentially spanning almost the entirety of the summer, we do think that could potentially derate Orrington South. And as a result of that, if we do see additional flow in from New Brunswick, it's likely that could potentially cause negative congestion in northern Maine and really mute the downside impact of any additional flow from New Brunswick. So this is something that, in and of itself, I don't think is a huge issue. However, with the expectation of a relatively high load, along with limited imports from New York, along with limited imports from New Brunswick, and a relatively high gas cost, if not gas supply issues, then all of a sudden it does all add up to a relatively bullish concern, at least for June, if not for the entirety of the summer. The last line on here that I mentioned is Pilgrim. This is one of the three lines that comes out of Pilgrim. This isn't something that I would put out a lower concern than the other two lines, because I think this is something that if conditions are if the system is constrained enough, then we may actually see this get postponed if it does have the impact that we're concerned with. But ultimately, the worry here would be, does this derate the output from Pilgrim, which in a low load situation obviously would not be that big of a problem. If we do see those loads start to climb, however, then the limitation of any kind of base load generation would be something that would certainly put the system under greater strain. This is again just kind of moving back to the historical expectations here. New York historicals. Last year we did see a kind of the oddball here was some additional imports from IMO. We think that is something that's likely to continue. One of the other factors that we'll get to in the presentation is a loss of the Dunkirk unit. This is something that we think will continue to have a bullish impact on Zone A. As a result of that, we think it's likely that IMO will continue to push power into New York heavily, especially if the load is as high as what we think it's likely to be. We think that will continue to put pressure on that interface, and can see IMO continue to pull power into New York. In NEPOOL, really not really the only thing here that we would mention as noticeable would be the likelihood of increased flows from New Brunswick. As I had mentioned previously, work at that Albion Road to Maxey's is likely to impact the Orrington South interface. So it's unclear as to how much of an impact those flows from New Brunswick will actually have. So generation changes, and I had alluded to this earlier. We're looking for retirements from Dunkirk and Genscape. Excuse me. Of the two, we certainly see Dunkirk as providing a greater risk, just because of the upside, the bullish impact that we would expect it to have on Zone A. We're already seeing quite a bit of congestion in A. Or we have been seeing congestion in A for the last couple of weeks. This isn't necessarily something that we think is caused by Dunkirk, but we do think it's something that is exacerbated by the absence of generation on the 230 system in A. So we think the potential for New York to go through the summer without that unit does provide us some additional upside risk there. Genscape being located in G, we don't think that this is going to have all that much of an impact on average, but certainly on the high load days would have the potential to further move pricing up. It is important to note that with the HTP project completed and seeing those flows come in from PJM, it is logical that that would reduce the need for flows out of G South, and it is of similar size to that Genscape plant. So that's why we don't expect this to have a tremendous amount of impact, with the exception of those high load days. As far as additions are concerned, we're not. I think probably the most important would be this Marble River wind farm, which is up in D. This will be the first summer that we see with the Marble River wind farm, and it's nothing specific to Marble River aside from just to note that with the continuing addition of wind generation in D, we continue to see downside pricing signals as a result when the wind is high. I don't think this is something that's going to have a tremendous amount of impact this summer. However, going forward, if we continue to see the introduction of additional wind farms in that Zone D area without the build-out of accompanying transmission, our long-term concern is just further downside to D, and a question of whether or not if that downside pressure on D would eventually impact the pricing of the interface with HQ. Like I said, I don't think this is something that is a fairly near-term issue, but something to kind of keep on the radar. So for NEPOOL, no significant outages are planned, and no significant additions for this summer either. I did want to mention, in comparison to what we consider to be the closest analog as far as demand is concerned, looking at 2010. In 2010, if you go back to the associated heat rates with that year, it's important to note one major addition, or I should say, in comparison, two major additions. The first is going to be clean energy, 620 megawatts of CC in Connecticut. This unit was not in commercial service in 2010. I think 2010 was actually the summer after the unit had exploded during construction. The other unit in question that I wanted to draw your attention to is Northfield Mountain. So Northfield Mountain is the larger of the two pump storage plants in NEPOOL. This is about 1,000 megs of pump storage located in western central Mass. This was out for the majority of 2010, undergoing a major overhaul. So this unit in particular is something that would have escalated the, or I guess, would have pushed up all of the heat rates in, or all the peak heat rates for 2010. This unit is really constructed specifically to take the in the system, and we have absolutely no reason to expect that it would not be in the system. This is going to cut the peak pricing on the date down. So on average, this is something that is going to provide some relief in comparison to the 2010 pricing level. So in summary, again, we're looking for relatively strong temperatures and weak precipitation for the summer. That this is going to be consistent for both New York and for New England. The other major drivers are going to be the retirement of Dunkirk and Danskammer, start of commercial operation of the Hudson transmission line, the first summer that we're seeing yet more wind generation in D, the elevated natural gas pricing, along with the risk of stronger regional basis. And lastly, just the potential for the return of Neptune to the full capacity. This isn't, I should note, this isn't something that we have a specific date tied to. It's just a general risk. Obviously, would be a downside for Zone K, but it's something that we're yet to see any evidence of a specific return date. In NEPOOL, as I had mentioned before, the specific gas basis risk around that Cromwell outage. So this is something that's going to be specific to June. Worst case scenario on this is higher gas pricing along with a limitation of supply. We think best case scenario is just the increase in basis pricing. The next point here is just again that we do think that additional imports from New Brunswick will have a muted effect because of that Orient South congestion. And thirdly, looking back at the heat rates from 2010, just make sure that we do take into consideration the fact that we do have that Northfield as a peaker to drop those peak prices. Finally, and this is of some concern right now, or moving into the next few weeks. If we do see that gas pricing pick up, we do see demand pick up at the same time. A limitation of potential imports from New York would be something that would provide further bullish risk to the Mass Hub. Right, and that's everything that we have for you guys this afternoon. I'm happy to take any questions if we have any.
One question was typed into the question box here. They were just wondering if hub prices are average of on-peak, and neglect off-peak prices.
That's correct. Yes. So specifically, specifically the focus of our analysis here were the on-peak pricing. So this would be the 16 hours of on-peak, neglecting the off-peak pricing. The only other thing that I would that I actually bring up here, later this week on the 23rd, the ISO New England is going to shift the dam window close to 10 a.m. Excuse me. As far as the overall macro impact to this is something that that we're going to have to, like everybody else, wait and see how much of an impact on the overall system this has. But in general, our concerns really revolve around the timing change and how that's going to impact generation purchasing gas for the next day. Right now, our expectation would be that because generation is going to be having to bid in 2 hours prior to the previous deadline, that gas would be trading earlier on in the morning. The alternative to that would be more similar to a New York system, where we see generation bidding off of, and most times bidding off of gas that's delayed a day because of that 5 a.m. deadline. It's unclear at this point what the specific outcome is going to be, but it's something that that we are going to have to keep an eye on, and it's certainly something that, just given the nature of the summer market, we certainly have a good deal of concern with, as this change is coming literally on the doorstep of the summer months beginning. So it need full promises to have no lack of interest as we move into the summer. If we don't have any other questions, just thank you everybody for your time, and hopefully you found this useful.
And please take a moment to complete the very brief survey that will pop up when you close out of your screen. Thank you.